very few times in history have the official consumer price index inflation statistics, the CPI inflation rate, very few times has that actually been higher than the mortgage rate. And we have that now. It's truly amazing. Greetings and good day from Jacksonville, Florida. I wanted to give you a glimpse of the skyline. This city has a pretty great skyline, very nice. And there were some fireworks across the river the other night. And what am I doing in Jacksonville? Well, you probably know that we just wrapped up hosting our Wholesale small group mentoring. First time we've done a small group event like this. If you've been to our conferences, you know we have 200, 300 people at those conferences. But this one was unique because we really went out in the field, looked at properties, talked to sellers, put signs on properties. We had the bus for 2 days. This was a 3-day event, Friday, Saturday, Sunday, and just really enjoyed it. Shared a lot of meals and, well, quite a few drinks with our group. And I just love seeing everybody. We had 16 people and it was a lot of fun. We got to share a couple meals every day. On Saturday night, we went out for another nice dinner and rooftop bar afterwards and actually played that heads up game. I've been wanting to play that forever. You know, it's kind of like charades. And that was a lot of fun. We had kind of a big table at the bar, and that was really neat. So anyway, I just want to say thanks to everybody who came out for that. It was just such a great event, big success. And we really enjoyed seeing all of you. And a couple of you have taken our partner, Todd, up on his one-on-one sessions where he's going to fly to your city or any city you choose and do some wholesaling with you. So looking forward to hearing more about those when they happen. I think the first place Todd is going is to Modesto, California, I believe. And that's going to be really great to hear about that one-on-one. So if you're interested, let us know. Just reach out to your investment counselor. We'll be glad to help you with that. But as you can see, we had a fun time, and it was a really interactive, tactical event where we really did the stuff. Right? Unlike theory, I love teaching theory. I love macroeconomics. You know that. But this event was a little different because we really went out and did the thing, and learned how to pick up wholesale properties in a market, how to fill out the contracts, buy contract, the sell contract, all of that stuff. We called some sellers on the phone. Just a neat experience to do the real hands-on, roll up your sleeve stuff. So that was a fun time. And thanks again to everybody who came out and made that event so fun. Really, really enjoyed meeting all of you, hanging out with all of you, having drinks with all of you. It was just a really fun time. So thank you to everybody who came out to that. Now, you've heard me talk about this before. This is an old saying. It's not mine. Well, they say real estate, I say income property, because those are different, by the way. But income property is the ideal investment. Why is it ideal? Because that's an acronym. It provides income, depreciation, equity growth, appreciation, and leverage. And of course, when we say depreciation, we mean that in a good way, because that is a tax benefit. By the way, I'm losing my voice here after this big weekend, so let me clear my throat. Okay, maybe it'll sound a little better now. Kind of a raspy voice after this big weekend. Anyway, but the bonus here, of course, is, you know what I'm going to say, right? You regular listeners, the bonus to all of these is inflation-induced debt destruction. And now, more than ever, in maybe anybody's real estate investing career, or maybe even anybody who's listening's lifetime, this opportunity is available more than ever. Remember, very few times in history have the official consumer price index inflation statistics, the CPI inflation rate, very few times has that actually been higher than the mortgage rate. And we have that now. It's truly amazing, truly amazing that we have that opportunity. But wait, there's more, as they say on that late night infomercial. It gets even better because the real inflation rate is dramatically higher than the CPI rate. And so that means we get paid even more money to borrow. And then we factor in the tax benefits and we get paid even more. And I'm not talking about depreciation tax benefits. I'm talking about simply interest deduction tax benefits. Because remember, whenever we do something, whenever we spend money related to our income properties, the government is, of course, our partner. And as such, depending on our tax bracket, state and federal and so forth, it gets a little complicated there. But we basically, for most people listening, probably get about a 40% benefit. So that means we're really only paying about 60%, very roughly, of the amount. So if we pay $1,000 in interest per month, and that's what we're writing the check for, we're really only paying in real dollars after tax benefits about $600. So let's always remember that. But I want to go into those tax benefits a little more because this gets murky when people talk about it. Income property is the most tax favored asset class in America. There's nothing better that I'm aware of than income property as far as a tax favored asset class. And remember, taxes are the single largest expense in most of our lives. And I try to just boil things down to where they're simple to grasp and understand. So I've identified these 6 categories of tax benefits that I want you to think about. I've never really presented it this way on the show before, so I think this will be helpful to many. So first is depreciation. This is the holy grail of tax benefits. When we acquire an income property, we have to remember we're acquiring 2 things. We're acquiring the land that the property sits on, of course, and then we're also acquiring the structure, the improvement, the house, the apartment sitting on that land. And the IRS allows us to depreciate that over 27 and a half years. If it's commercial property, the schedule is longer. So remember, with residential, that tax benefit is about 25% better than it is with commercial property. So that's one thing. And they allow us to depreciate it and get what's called what I call a phantom write-off or a non-cash write-off. This is extremely beneficial to us, extremely beneficial. And that's why depreciation is the holy grail of tax benefits. Expense deductions, number 2, expense deductions. So a lot of the expenses, and if you're a business owner, you know this, right? It's a tremendous benefit to own a business or at least be an independent contractor where you get a 1099 rather than a W-2 because you can deduct all sorts of expenses that you would otherwise have anyway. You would have these expenses in your life no matter what, right? You would have a cell phone, right? And you'd have a cell phone you pay for, internet access at your home, maybe some of your meals and entertainment, travel expenses, office supplies. There's just a whole bunch of expenses that you would already have in your life anyway. But even if you don't have a business per se, say you're an employee, your income property portfolio becomes a business. It's like a side hustle, right? And so many of these expenses that you already have anyway in your life can become deductible to one extent or another. Okay, now check with your accountant. I am not a tax professional. I am not a CPA. And I'll just say it since I'm talking about this, I am not a lawyer. And none of this can be individual advice. Everybody's individual situation is much, much different. But I'm giving you the concept to take to your tax advisor, to take to your accountant, to help you get the biggest benefit. Okay, now, depreciation recapture. This is the thing that sort of comes back to bite people if they don't plan for it. And there are creative strategies that you can use. Many I've talked about on the show over the years. One of them is the monetized installment sale, right? There are many things that you can do to avoid depreciation recapture, not the least of which is the beautiful, gorgeous, incredible, fantabulous 1031 tax deferred exchange. That is an incredible, incredible benefit, the 1031 exchange. So here, one thing that people have to remember is it's very hard to calculate the additional return on investment that over the course of your lifetime you can take advantage of with an income property investor on a 1031 tax deferred exchange. And remember, you can't do this on syndication investments. You don't get this benefit. So be mindful of that. And again, check with your tax advisor. But so far as I know, you can't do it. So when you get out of a syndication deal that you invested in, you just got to pay tax, right? But when it's your own property, when you follow my strategy, when you're a direct investor, you can do a 1031 tax deferred exchange. I've done many, many, many of them. I'm doing one right now. I did several last year. A beautiful thing to defer the gain. And remember, when you do that, you're investing pre-tax dollars. So you get to invest a lot more money in the deal, which is a beautiful thing. So 1031 exchange, huge. Becoming a real estate professional, number 5. Now, we've done shows on this over the years. This, of course, like everything in the tax code, it's a little complicated, but you can get your head around it. If you want to know more, just go to jasonhartman.com and use the little search engine there and type real estate professional and take advantage of this opportunity if you can. It is an incredible thing. It's another one of those sort of holy grails of tax write-offs, real estate professional. And number 6, and finally for today, there's probably more, but I just wanted to jot down these 6 real quickly. Cost seg, or cost segregation. When you have a property, you can bring the depreciation schedule forward. You can depreciate things more quickly than that 27.5 years that the IRS allows that we talked about, because certain components of your property are depreciable on, say, a 5-year schedule or a 7-year schedule or a 15-year schedule, which means you can get more tax benefits sooner rather than later. Now, again, you got to make sure you qualify for all these benefits, but really great opportunities here. Remember the cardinal rule of the time value of money and the way inflation works. I would rather have the benefit today and the cost somewhere in the future. I learned all about inflation from a cartoon character when I was a kid. You know what I'm going to say? Wimpy on Popeye, right? Wimpy's famous saying was, "I'll gladly pay you Tuesday for a hamburger today," right? Or maybe he wanted a cheeseburger. I don't know. I think it was a hamburger. Wimpy, didn't you want a cheeseburgers are better than hamburgers? Okay, anyway, the point is that you get the benefit of the thing today, the hamburger or the cheeseburger. Someone look that up and comment below whether it was a hamburger or cheeseburger that Wimpy was talking about. And you get the benefit today, but you pay in the future. That's a great deal, especially if you're not paying interest, or you are paying interest, but you're not really paying interest because you're delegating the interest responsibility, that interest payment, to a tenant. Or better yet, you're borrowing below the rate of stated inflation, like you can now, which is really rare. And almost always, you're borrowing below the rate of real inflation. So income property is an incredible asset class because it offers so many unique benefits, unlike other asset classes. Okay, now our winners. We've got our $50 gift card winners this week. Well, for last week, I should say. And one of them on the YouTube comments, just comment on YouTube, make a lot of comments, and you'll be entered randomly to get the $50 Amazon gift card. Okay, so this one, and forgive me, it's hard to pronounce this one. Xiaowen Hong, is that how you say that? I don't know. Anyway, the comment was glad to be invested in positive cash flow, linear market real estate in these times of volatility in stocks, commodities, and cryptocurrencies. Yes, I'm glad you are too. You're following my strategy. Linear markets are what we recommend. So you win the $50 gift card. Go to jasonhartman.com/ask to claim your prize. Just tell us you're the winner because we don't have your email address or anything. So you've got to come to us, jasonhartman.com/ask, and claim your gift card, and we will send it right over to you. Now, L. von Mises, I love that, by the way. That's Ludwig von Mises. I know it's not really you because, well, you're not alive, but I love that that's your handle or your screen name because Ludwig von Mises was great. Read books about Mises, and there's a Mises organization. Their people have been on our show many times over the years, or the Mises Institute, I should say. I've donated money to them. They really have a lot of good material on Austrian economics, free market economics, and all that kind of stuff. So this is an Apple Podcast review. You can do either thing or both to increase your odds of winning. Write a review on Apple Podcasts, comment on the YouTube videos, and L. von Mises says, great podcast on real estate, personal finance, and general economics. So go to jasonhartman.com/ask to claim your prize. And for today, we're going to take a couple of Q&A questions that I recorded earlier with one of our clients, Gene Morris. Awesome guy. He's purchased several properties through our network. And let's go ahead and get to that right now.